Well, good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Monday, the 25th of February, 2019. We're about 4:15 p.m. Busy day for us here. In the metals, I thought it was pretty poor performance. Not good performance. You know, yesterday we heard the president talk about the fact that the U.S. and China are getting very close, making good progress on trade. The March 1st date where the tariffs ran out and the next round kicks in has been pushed back, not eliminated, pushed back until a deal can be made maybe at the end of March. If not, watch out. You'll get that other round of tariffs and what comes on. The president sort of knew that news was going to be good in some areas because this morning he tweeted, what about those oil prices? Basically telling OPEC they're on the wrong track and that what they should be doing is actually producing more oil so that their prices come down and they don't choke off the world demand. It seems to have worked. I was pretty surprised that it worked as well as it did. It took these markets down because you would think the fundamentals, if the U.S. and China are getting closer, would be more bullish than bearish for energy demand. At least that's what I think. In any case, this is a metals update, and copper up 10 points. I wonder how much of this is caked into the market already. Platinum was up good. Palladium was up. Silver not. Gold not. Bit disappointing, and you can't blame it on the dollar. The dollar was down, not up. You just got to wonder how much of this is in the market. I step over and I look over at the Japanese yen. It was down 36.5 points. So the markets that people might have been running to in the uncertainty, they're backing out of a little. Is it a big change for gold? No. You still can't tell me that other than on a weekly basis, $13.29.20, you're down about $3.50 from that so far. Okay. The price action has been one where the market has been consolidating and getting narrower ranges the past 3 days. Actually, today, day before, this was the big drop and it hasn't done anything from that. The problem with that is this. If the market takes out 1323.30, I will end up with a pattern of lower highs and lower lows under that low. I can make an argument right now that I could have an arrow pointing up here and one here. I could argue that I've got the higher lows, but I've got the lower highs. I don't know which one's going to take control of the market. The 18-day average of closes at 1322.70 is advancing on the tune of not too much, maybe $1 at a time. It's going to be very close to this last break low. I think that's going to be the key. What does the market do at that 18-day average? Does it get under that last low? And if it closes under those numbers, that means more of a correction can be in store. Here's what would be bullish. Don't make your run for this. Get over 1335.60. You'd have the higher lows back into the higher highs. The market would be back into a bull pattern, calling for the potential of maybe the upper Bollinger Band resistance of 1343 to be in play. So I've got all kinds of things at work here, and I have momentum not helping me. I believe that momentum often leads price. It's drifting down as prices are drifting down. This is a hard chart right now. GLD, the popular ETF, has a very similar pattern, except it's already got the swing line down. Even if it takes this out again, what happens? Is the swing line up or down right now? The story's the same. I wanted to see if you were picking up on it. You have the higher lows and the lower highs. I just didn't know which ones to draw on these charts. You don't draw both sets. So it was flip a coin. So I did one set one way, the other like here. If you take out 125.05, then you'll have lower highs, lower lows, calling for potential support into the 124.58 level. What do you want not to occur? Don't bother doing that 125.05. The resistance, if you can move up again, is back at 126.44. Again, momentum ugly, not helping. When we come to the GDX, the gold miners ETF, lower highs, lower lows, even with the mine takeovers that are going over right now, the battles for some of them, of the big boys, as you call them, and not seeming to matter. This could be where the merger and acquisitions take place, but you've got the swing line down, you got the bias up because you're over the 18-day average, and you have momentum pointing down. A confusing chart. The gold-silver ratio still is not favoring the silver gaining on the gold. And when I come to May silver today, the market did what it had to. It did hold up today at that 18-day average of closes. The problem is it's not running from there. And if the market takes out, and you got to be careful here, 1585, you could all of a sudden have lower highs, lower lows, and momentum is looking, it's trying to turn itself down. What do the bulls have to do to keep the party going to the upside? Don't take out 1585. Let the market start baking itself to higher prices. In the copper market, you can see how the market finished at 294.90, just under the upper Bollinger Band. So that number, even with all the good news today that came out when we first came into the marketplace last night, that, hey, look what's happening. China and the U.S. getting together, Dr. Copper, as they call it, running to the upside, except it's got a big resistance point at that upper Bollinger Band. Momentum-wise, it's all right, because if you look at this, both numbers are over 80, both under 80 on Friday, and both under 80 on Thursday, not the day before. So until the red line closes under 80, I think that on the breaks in the market, you're going to find layers of support. Let's assume that you lost that red line and it closed under 80. Then wherever that 18-day average is at that time could be one of the support zones. In the platinum market, overbought, in an uptrend, got up Friday to the Bollinger Band, just missed it on this day, and extending it a bit today. So still a strong market, still in an uptrend, but overbought. The palladium has been the strongest of the metals. I know I'm a broken record on that, but it just stays at that upper Bollinger Band and it stays embedded. That's what bull markets do. In the dollar index, what's going to happen here? We've seen the market roll back to the downside. Today's battleground, the 18-day average, it's settled under it by a fraction, but settling under it's under it. Therefore, going home, it's in a bear state. You have lower highs, you have lower lows, you have momentum down, and the bias down. Next support could be the important 95.86 area. I think there's a lot of traders here looking at this 96.12, saying if they can get the market under that last important break low and under that 18-day average like it's doing, that the market has rolled past tense to the downside. You know, one of the things I love to do is teach. I think you know that in watching these. So what we did is we created at the end of last year a brand new futures trading kit, and the contents of it are pretty simple. This is meant for both the person that's looking to get into futures as well as those of you that want to work with different charting software products. We have two of them in here, by the way. One a Java-based, the other's a Windows-based. And yes, we have our phone app in there as well. I won't bring it out and show it. But whatever I write appears if you're one of my subscribers in my phone app. So could be interesting for you. 14 typical chart patterns, what they mean. You're going to get questionnaires in this. You're going to learn. You're going to get ideas on money management, technical analysis. You're going to see cause and effect. And I like this because what cause and effect's about is the M1, M2, M3, the velocity of money, if you will, the printing of it in the U.S., the way it moves through the economy. What does it do? You're also going to get one of these video sets. Now, there's one on pivot points, another one included on the Arun indicator. I'm also now about to start recording my new special reports, and that'll be a regular feature. And you heard what I said, recording. I don't think I'm going to write anymore that much for those. I want to do the video recordings. I think you'll see a lot more. You can pause it. You can look at what's going on. The story, I think, comes out better. It's something I'm just going to start doing, so look for it maybe as early as this week. How do you get involved? Well, you can call my staff. They'll just send it out to you. It's just a link. It's not a CD or anything. It just opens right on your computer. Away you go. You can go to our website. You'll see our futures trading kit and one of our carousel of offers, or you can click up here. And while you're there, anything else you see you like, good time to grab it. I'm Ira Epstein. You have yourself a good day. I'll talk to you tomorrow.